doing business in Africa. You can't afford to be without Africa Investor.
You've been participating over the past several months, including the Africa Climate Summit. And so from your perspective, what do we need at the COP? What are the things that need to be decided, the processes that need to be put in place, especially from the finance community? Just a general introduction on your side on how you see the landscape looking.
Yes, no, thank you very much. I'm glad my colleague said that we can be frank and fair as colleagues and fellow citizens in this planet of ours that we have to protect. And thank you for the invitation to speak on behalf of the African as well as the global institutional investment community. So ambition, these days when we talk about ambition relative to the scale of the task, I think we're probably all very unambitious, requiring, recognizing what's really required to actually get us to where we need to get to. I think our observation is that the financing component, the investment need, is unprecedented, as I think we all know. We're hearing numbers now that are run-of-mill, that have never really been achieved on any scale before. But I suppose when we think about and look at the whole contextualization of ambition, I think we have a concern. And our concern is that we think the underlying vision for private capital mobilization at scale is fundamentally flawed. It's fundamentally flawed because it's a development-driven, a public sector-driven agenda to mobilize private capital. Now, if we wanted to accelerate and scale the mobilization of public capital, then I don't think that should be led by the private sector. But I think what we have now is we have public sector mindsets architecting how to mobilize private capital at scale with a track record which sort of suggests that if they were delivering that mandate, they would meet their targets. And their targets have been set very clearly and restated by the G20, which is for every $1 of multilateral development bank finance that they provide, they are supposed to mobilize $10 of private finance. What's the reality? What's the outcome? What's the performance of that? Well, historically and currently, for every $1 of MDB finance that they provide, they mobilize between 20 cents and 38 cents. I mean, that's the reality. And then if you couple that with the fact that the agenda has been characterized as one that should actually be led by the multilateral development banks and the global financial architecture is orienting everything along those lines, our governments are spending about 90% of their time working on the private capital mobilization agenda with MDBs, who even if we optimize the ability for them to leverage their balance sheets to de-risk and crowd in private capital, post the reforms that we are hoping that will happen, even if those reforms happen, they will only be able to close a mere 10% of the finance and the investment gap. Whilst our same governments are spending less than 10% of their time with the global institutional investment community representing $150 to $200 trillion of assets under management globally, less than 10% of that time with our constituency that can solve 90% of the investment gap. So I think there's a fundamental problem that we have here, and I think that we're calling for COP28 to sort of break the ice there, break the ground on what we would like to see, and we're describing that as climate investment statesmanship. We need heads of state to really get in front of this issue and understand that all of the nationally determined contribution projects and all of these other opportunities will not attract the private investment that's required. And let's not forget, emerging markets and developing countries, the majority of our nationally determined contribution projects will need to come from the private sector. We do not have the luxury of the sort of the fiscal capacity that maybe G7 nations have, where they can throw major incentives. So we're going to have to actually have a very different posture and a very different level of engagement with the private sector. And so I really do hope that that's what COP28 can deliver for us. So that is really an earth shot. And I think underlying all of this, we as the investment community see the whole climate transition as one of the generational investment opportunities of our time. But we need climate investment statesmanship. And I think fundamentally, one of the areas that I don't think has really been addressed at any good level is the extent to which we can collectively reimagine how to accelerate the geopolitical decision-making process. That's the fundamental elephant in the room. Great ideas, great science, great ideas from the private sector, but until we can get that uniform approach to geopolitical decision-making process. Have we seen that recently? Probably not for a long time, but we've seen, not a great example, but if you look at what happened with COVID, we were all at least able to get some degree of synchronicity. And I don't think that we've actually really worked hard enough, and maybe we need some of your firms and institutions to really begin to reimagine and give our leaders a perspective about how we can accelerate that process, because the climate clock is ticking and it's not ticking in our favor. Thank you.
Thank you. And some sobering numbers, but also something that we discussed back in May around people who are involved in the process speak about climate finance, speak about involving the private sector, and I've bumped into a few former negotiators over the past several days and who no longer negotiate and said, it's funny that we used to talk about involving the private sector. We had no idea. And I think there's an important role to play around building financial literacy or collaboration across the different actors within that space. And so I hope that we can kind of move on that discussion.
Can I just add one thing there? I mean, to that point, and I think we experienced that together at the NDC conference in Berlin. There seems to be this collective approach to ensuring that the word investment.
Yeah.
And we actually see this entire transformation, the climate transformation, the climate transition. In Africa, we say it's a transformation because of the low levels of access to energy. Well, we have to transform before we can transition. But the whole agenda is, in our view, a medium to long-term investment agenda. And if we continue with this MDB concessional green finance characterization, we know that we're going to run very quickly into a green finance debt crisis for many of our governments. So we need to be able to bring on board long-term capital that plans for the long term, take some equity co-ownership participation, and have that longer-term view. Otherwise, I think we're going to be in a very, very bad place. Thank you.
Hubert, I'm from Australia, and our government will do it would rather, our ministers would rather eat their own children than spend money on the climate or environment. And one of our arguments is that we don't want to spend money on the climate, and one of the arguments is and this is literally in one of our new international aid documents, strategies, if the Australian government spends too much money on climate finance or development, it will crowd out private sector investment. And my understanding is that the more public investment that is put in, that de-risks the landscape for private finance. What response can I put to the government saying, like they literally have graphs saying we can't spend too much money because then the private sector won't, it will crowd them out.
Thank you. And then Paolo, there was a question by the gentleman in the middle there. We'll take that third question and then go to the panel.
Sure. My question was also for Dr. Danso. I was at an event yesterday and heard from Norges Bank, which is the operator of Norway's sovereign wealth fund. They spend such a tiny fraction of their investments on emerging markets, particularly in Africa, Southeast and South Asia. I mean, it's shamefully tiny. So I'm just wondering if you could elaborate. You mentioned the climate investment statesmanship. I mean, what would that look like? Maybe a bit more on what you would hope to achieve or what that might look like. Thanks.
I think I'll try to combine because there are some similarities between what Australia could do as well as what Norges could also do. And I think Australia is very known and respected for its prolific pension fund, and institutional investment community. And I think you actually coined the phrase PPP out of Australia. So we obviously have public-private partnerships that we're all aware of, that we take the view that are not going to be appropriately fit for the future to be able to mobilize private capital at scale or have that capital deployed, because it's a very slow process that hasn't really been successful. But in Australia, you came up with another version of PPP. You called it pensions public partnerships. And you were actually asking the government to work with you under Ambassador Hockey at the time, when he actually hosted the, yes, you know, we all know Joe, the champion of mobilizing institutional capital and aligning interests with government capital. And we also know Martin Weidler, who's just the chairperson now, probably using the wrong name, of the institution that's actually been set up to catalyze private capital, and it's actually been capitalized in many respects by the government as a strategy and as an instrument to crowd in more institutional investment to help with the transition. So we actually think that those are reasonable and applicable, and they have good potential as models. If you sort of draw some comparison with the Inflation Reduction Act, I mean, we in the continent now are putting together our own version of the Inflation Reduction Act, as the EU has put together its own version, the Net Zero Industry Act under the Green Deal. Why? Because, you know, America's been able to mobilize $500 billion of commitments in 12 months, and Africa mobilized less than that in foreign direct investment for all sectors over the last decade. So I think, you know, what we're asking for in the COP process is, you know, not just a finance day that it's only development finance and sort of characterizing everything as a development challenge, but rather how do you work with pools of capital, recognize that there are challenges, very deep challenges with the NDC process and the NDC projects, because those NDC projects are the pipeline against which we are supposed to be able to deploy capital and earn a market appropriate return, so, and climate adjust that return as well. And what we're seeing is a lot of the NDC projects are being funded by technical assistance and MDB type instruments. And as a consequence of that, where we think we've got a $3 trillion pipeline, why isn't the money flowing? It's not flowing because the grant givers are ensuring that the projects are designed for their instruments. So they are not bankable. So that is the fundamental flaw of everything that we're trying to do, everything that we're trying to say. The institutional investment community commanding $150 to $200 trillion that could make a percentage of that available and close this financing gap are being marginalized. So we've asked COP, for example, to have an investment day where we bring that $150 to $200 trillion to the party. And we're being told, no, MDBs are leading the agenda. MDBs are a collective $1.5 trillion as a balance sheet, and they have the mobilization ratios of 0.5 out of 10. When they need to be much higher. So I think fundamentally, I'm not sure how we get to the point where we all have to move our feet. We all like to be in rooms where we dominate a conversation, but in this we all have to work together because we're interconnected and there's high degrees of interdependency. And I think that is part of the reason why the likes of the Norges banks of this world and other institutional investors are not investing in developing countries, because the development agenda has, you know, enjoys seeing emerging markets, developing countries in a position that they're comfortable with. And I think if you look at the green industrialization and the increasingly multipolar world that we're living in, you're going to see a reconstellation of economic and sort of climate contributions from other parts of the world. And I just don't think that a lot of markets are ready for that. That is why we need institutional investor public partnerships, probably very similar to what was initiated in Australia, where pools of capital work with governments on a strategic plan where that capital is most appropriate, where interests and risk can be shared and aligned. And then you save government resources to be able to do things that private capital can't do.
I guess just to build on that, and thank you, and sorry if anyone's asking a question, but so our government uses those partnerships to divest itself from, it says, we can't afford to spend this money, the private sector will be spending it, we're going to set up a public-private partnership, and then they completely step out. So I suppose what I was really getting at was, governments have to spend money if they want the private sector to spend money. It's not one or the other, it's both, and you spend money to make money, really.
Yes, not only do you spend money to make money, you should actually be borrowing to invest money. And I think that's not the concept that we've actually seen, and that's the concept that actually needs to happen. We know exactly the quantums that we need, and then we sort of come to the table and make these very low ambition commitments. Why? Because we say, this comes from our development budget, and we're going to increase our development budget to X, knowing that there's a big gulf and a huge gap, when really we could be going to the markets and borrowing to invest and getting a return to invest and sending a different market signal. So we don't actually have an investment culture, coming back to the whole phrase that everything in the climate agenda has to be green finance. Everyone's scared of using the word investment because the culture and the psychology is not there. And it can only be through a medium to long-term investment that we can mobilize the trillions. I mean, we're going to be a quintillion economy by the end of the century, and World Bank were talking about billions to trillions over a decade ago. So I don't understand. I sat on President Macron's new financial pact, finance and private sector task force. It was a challenge to get members of the group from the MDBs to mention the word trillions. So that is the mindset shift that we absolutely need to see. Climate investment statesmanship, we need to extrapolate the private capital mobilization agenda from the bigger, broader global financial architecture activities. And the capital is there. We just need to be able to design the transactions so that they can align with the mandates, the fiduciary mandates of the capital, and we can close that gap. But all the while, certain constituencies are trying to hold on and preserve their status quo and keep certain markets in the position that they are comfortable with those markets being in, and having someone else to blame for not mobilizing the capital. We get nowhere. It doesn't suit us as investors because we don't want stranded assets. We want to contribute towards sustainable development and growth, both on the SDG side and on the climate side. And I think that coming together, we need to have that as a bilateral between institutional investors commanding those pools of capital and heads of government that have that mandate and sovereign responsibility. And I think that's the way we have to completely change the dynamic and the conversation.
And what's the one thing that you would see as an essential part of COP28 outcome?
Yeah, I think I'm in agreement with all of my colleagues. To the question about civil society, I absolutely think we work with various different civil society groups because we want to ensure that the investment narrative and the investment and the positive impact that long-term investment can play. What the community are coming back to us, the civil society groups, and coming back to us are saying is that they're almost in need of reinventing their approaches because they feel that they're using the same tactics that they've unsuccessfully used in the past at a moment where we need to accomplish more than we've ever been able to accomplish in the past. So that sort of redesign, if you like, or re-engineering of how civil society can actually get its message taken on board and acted upon, I think is something that I know that a lot of the leaders within civil society and advocacy groups are prioritizing. I think from COP28, just call me the broken record. This mobilizing capital issue needs to be institutionalized within the whole UNFCCC process and not just a side event or a day at COP meetings. So I think if that fundamentally could happen, where there's support from UNFCCC to institutionalize the process and thereby encourage future hosts of COP summits, starting with COP28, to actually make that happen and inaugurate that, I think that would be a very powerful outcome. And one of the key underlying issues there, as we begin to think about how to make the nationally determined contribution projects more bankable and more investable, is to really address this issue. And this is one of the big issues that came out of the Africa Climate Summit, of how do you intermediate the natural resource, the critical minerals, the sort of the youth bulge, all of the different sort of super abundant natural capital that we have in emerging markets and developing countries, and integrate that into the $10 trillion per annum and growing global green industrial economy, and help us negotiate the value chain for that. And I think that in itself will solve a lot of the private capital and finance and investment related issues. Thank you.
Doing business in Africa, you can't afford to be without Africa Investor.